The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 12th terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I absolutely treasure your presence. But you know what? I am absolutely grateful for your presence here today, and my outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential, because living up to our potential is something we must master each and every day. So let's begin our day with an empowering belief or two. Beliefs, folks. Beliefs have the power to create and the power to destroy. You and I, we have the awesome ability to take any experience, any experience of our lives, and create a meaning that either disempowers us or one that can literally save our lives. What we can or cannot do, what we consider possible or impossible, is rarely a function of our true capability. It is more likely a function of our beliefs about who we are, and that matters. Why? Because all personal breakthroughs begin with a change in beliefs. So how do we change, you ask? I consider that to be one of the best questions out there. I've found the most effective way to change is to get our brain to associate massive pain to the old disempowering belief. We must believe at the deepest level that our disempowering belief has cost us in our past. And if we continue with that, it'll cost us in our present. And ultimately, it will only bring us pain in the future. Sometimes knowing what we don't want is just as important as knowing what we do. I think knowing both is key, because once we rid ourselves of the disempowering belief, we must associate tremendous pleasure to the idea of adopting a new empowering belief. The question is always the same. It's not what would we do if we had the means, the time, the influence, and the educational advantages. The question is always, what is it that we're going to do with the things that we have? Why? Because, folks, you do have an amazing power within yourself. Let's go check out the amazing power inside these markets here. Right now, the Dow lead the charge to the upside. It's up about 11 points, trade out at 15,337. S&P is flat, down 28 ticks. Nasdaq is up. Nasdaq is up 3 points right now. Russell 2000 down 32 cents. NDX 100 up 2.5. New York Stock Exchange is off 15 points. Goldilocks back $33 right now. That's off 2.5%. Silver is off 90 cents. That's down about 4% right now. Our call-in number is 877-927-6648. Let's go check in on the S&P 500. Let's go see where it's at, what it's doing, where it's headed to. Right now, it is traveling out at 1688.69. Now, what we can see here on this chart of the S&P 500 is that it came back into that price channel. Now, it's always amazing, isn't it? When you break a trend, when you break a price channel, I don't know the percentages, but they're high. They're extremely high, and you always want to be paying attention to them. When we take a look at this little rising price channel off of the November 16th lows, those are the blue diagonal lines that we're looking at inside my screen here. We saw a break of that area with conviction, by the way, August 27th, no question about it. And what we saw here in the last couple of days, first on September the 9th, we saw a rise up to the bottom of that rising price channel. And then we saw it get inside it on the 10th. Yesterday, some additional conviction. What it's trying to do right now is at least get up to the 0.786 retracement. That number, 1692. It's at 1688 right now. So it should be able to do that. If it can close above the 1692-ish area, that sets up a move to a 100% move of the move. That would get you back all the way to that August 2nd swing point. Now, when you do a 100% move of move, it doesn't mean it has to get up to the high at 1709.67. It could qualify by getting down to the low of 1700.68. So I would say where the S&P 500 is headed to is somewhere between 1700 and 1692. Right now it's traveling out at 1687. Let's go take a look at the Dow. We'll do all the indexes first, then we'll go switch over. We'll take a look at the ETF structure. Now, just like we were looking at inside the S&P 500. If we take a look at the Dow broke its trend line. So I have here a trend line versus the price channels. You can use them both. You should use them both. You can draw both lines in here. In this case, we're showing the trend line coming off of the November 16th low out there. That trend line was broken with conviction as well. Came down into it with conviction on August the 15th. Stopped right at that trend. Got through it on the next trading session, went down and actually tagged and touched the June 24th swing point low out there. So we've got one index, which was the weakest index, that did make its way down to June 24th. Now, what the Dow is trying to do, it's going to go ahead and try to get back inside that trend. It had made it to the 0.618 retracement yesterday. It did it with what? That's exactly right. It did it with a wide-ranging bar. Markets do not end on wide-ranging bars like that. It just doesn't. Now, could we see a couple of doji candles that stall out and peter out here today? Absolutely. Well, you can see anything in the marketplace, but typically you do not see a market end on a wide-ranging bar like that. You can see, take a look at the wide-ranging bars on the way down here. Take a look at the one on August the 15th. Did the market stop there? No, went down and visited the June 24th area. So, today's candle is going to be important out here, but what we should at least see is we should see the Dow attempt to get back inside the trend. If it can get back inside the trend, then 15,466 is its number. That is the 0.786 retracement of the move. The Dow is neither overbought nor oversold, so it has room to run to the upside. That's on the Dow. If we take a look at the Russell 2000 up and over the 0.786 retracement level, did it by gapping up, so it had some wide price spread. It did that 2 trading sessions ago, 3 trading sessions, September the 10th. I guess that would be 2 trading sessions ago. Right now it's traveling at 1054. The Russell 2000 wants to go tag. In this case here, looks to me like it wants to go tag the top of the swing point candle, which would be the August 5th area, that high of 1063.52. Now, 1057.72 is the low of that session. It got up yesterday, 1057.56. So stop just before it. It should get up and tag the high there at 1063.52. That's on the Russell 2000. If we go take a look at the NASDAQ Composite and the NDX, we want to do that because, yesterday was truly the opportunity for the bears to step in, and they just simply failed to do so. It had the opportunity to go ahead and set up its bearish candle. We haven't seen that out here today. Right now it's traveling at 37.25. So where is this headed to? This is most likely the composite is headed right back up to the top of its rising price channel. It could go ahead and break through that. If we just take a look at expansions here from the last swing point high to low, that would be August 5th. That high out there, 36.94, down to the low that came in on August 27th out at a price of 35.73, actually sets up a move. You can see it's already at the 1.272 level. That is at the 37.27 mark. So the next level up, which would take it, into or above the rising price channel, would be about 37. Let me expand this out here because I can't read that number. See if I can read it now. 37.68 could be on the horizon. So somewhere between, we'll call it about the 37.50-ish range to 37.68 is where price should move to, so long as it can close above the high from September 10th. It's 37.29.38 out there. That is on the composite. How about the NDX 100? As we take a look at the NDX 100, that too had the opportunity yesterday for a bearish reversal signal, but that did not occur. Right now, the NDX is at 31.80. We'll take a look at Apple. 31.79 is the number. So if the NDX can get above the September 10th high, which is 31.89, that should just go ahead and complete at least the 1-to-1 A to B. Well, could be the 1-to-1 A to B equals CD. That's 33.77. That's quite a move up there, but that's what that pattern is. Let's take a look at actual expansions of swing points, because that's what the first stop would be. So you're looking at about, come on, baby. Let me see here. The next move up inside the index would take it to about 32.08. That would be, about another 20, about another 30 points north of where it is right now. Our call-in number is 877 927-6648. Let's take a look at the ETF structure now. Let's go take a look at the Dow Diamonds. They are priced at 153.26. Came in there with a wide-ranging bar into that 0.618 retracement level. That says it wants to move up to 154.34. That would be the 0.786 area. You can see the Dow was traveling in that declining price channel. It broke through that. It did it with conviction by gapping up through that on September the 10th. Not too bad in the way of volume out there, 7.9 million shares. Of course, nothing compared to the downdraft of 10 million shares. Yesterday's trading session, only 7 million shares. It is now officially inside the downdraft, beginning the breakdown area of August the 14th, the low of which is 153.11 here, 153.24. This wants higher price too. This wants to get up to the 154.34 level before it gives us its next piece of information. It is starting to move towards, but it has not reached that level yet, starting to move towards the overbought condition, but it has not made its way there. I suspect the 0.786 area, if in fact the diamonds can get up there, that's when we'll start to see that pattern stall. Let's go take a look at the SPYs, see what the SPYs are doing here right now. They are priced out at a level of 169.30. They're up over these lines out here, these red lines going across my screen. A couple trading sessions ago, we went and took a look at natural areas of support and resistance. The red lines here representing resistance based upon candlesticks out there, bearish engulfings, the evening stars, the whole kit, the whole caboodle. And so the next area for the SPYs to get through, and this is going to be important for us to pay attention to, is in fact the high of July 24th, 169.86. That's at 169.30. Because if the SPYs close above 169, wait a minute, what's the number? 169.86, they will be up and over resistance. And when you're up and over resistance, that becomes new support. No, resistance is not necessarily the swing point. That's just something that's got to tackle and it's got to deal with. 54 million shares out there. What it did yesterday was 94 million shares. Something to think about. So it's starting to accelerate as it's moving into that swing point. It is up over in fact, all that the SPYs are doing here this morning is just testing that May 22nd high, which is 169.07. I believe that it tested it. Let's see, it got down to 169.07. So as long as 169.07 holds, it'll go test should go test that 169.86-ish level. It gets above that, and that could end up being an area of support. Not yet near the overbought condition, so it's got room to run to the upside. Let's go take a look at the Qs, see what the Qs are doing here. The Qs now traveling inside the swing point high from September 10th. That had 27 million shares. Yesterday, you were pushing up into it with 28 million shares. Today, so far, in the first, let's see, we've been trading here for, about 45 minutes or so. So far, it has done 4.4 million shares and is pushing onward and upward and is pushing it with volume. That says if the Qs can close above 78.32, their next price stop is about the 79.40 area, and that is on the Qs. That leaves us with the IWM. So I've got 15 seconds, looks like, to do this. The IWM here right now is inside the swing point. Came into yesterday, got into the August 5th swing point. That had 15 million shares. Yesterday, you were into it with 26 million. Guess what, folks? The high of August 5th wants to be tested inside the small caps, inside the Russell 2000. That price level, 105.63. Right now, we got the Dow is up 3, S&P is down 1. Let's go barefoot water skiing, folks, because it's pretty flat out there in the markets. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow's up 7 right now. S&P is up. It's up. It's down 78 cents, so it's flat. Composite is up $1.74. Let's go out to New York to Alex. Alex, thanks for calling. Thanks for holding. How are you this morning?
Very good. As a matter of fact, I was a daily winner.
You were? Oh, that's
yes.
Great. Oh, that's wonderful. Now,
you actually mentioned my name today.
Oh, that's great. Hey, congratulations, and thanks for playing along. That's really cool out there. Now, so wonderful. It's nice to pocket $100, huh?
Yeah. It was just, yeah. You can't say anything against it.
No, absolutely not. Oh, that's so very cool. Well, thanks again for participating in it and playing, and maybe you're going to inspire somebody else to actually go place a trade today that participated, and maybe they're going to put it. So you not only may have put $100 in your pocket, you might have, just by telling folks that you were a winner, you might have put $100 in somebody else's pocket. That's just simply how it works out in life. So
well,
you want to
I noticed during the commercial break that you brought up the Australian dollar, U.S. dollar, which is that guy who's made a fantastic profit. That's what he was trading.
Yeah, he has. You know, the on an Nadex platform, the currencies. Well, first, for folks that are just beginning to trade currencies, I think it's really a great platform to be able to use because, you know, unless you are a trader that is that has the what's the word I'm looking for? Well, look, you just have to be somebody that no matter what, before you place a trade, you're going to have your stop figured out, you're going to have your exits figured out, the whole thing. And that's really the nice thing about that Nadex platform, especially, well, in trading anything, but certainly in trading the currencies out there. So, yeah, I did go ahead and bring it up on my screen because I wanted to see what he was potentially looking at and some patterns that were out there. Now, Alex, do you trade currencies at all?
No, but I always, especially when I heard what that guy was trading, the first thing that popped in my mind was George Soros, because that's where he made his first billion was shorting the pound.
Yeah, absolutely. And what was the name of the guy that worked for him?
Jimmy Rogers.
Yeah, there's another gentleman's name, and it's off the Bruckenheimer or something like that. Real smart guy as well. He was advising them a lot on the currencies, and I mean that's so. Just as on the currency side, there's a winner and a loser just on any trade, right? Yeah, thank you, Stan Drunkenmiller out there, and so that's why when you're trading currencies, they are great vehicles, and you've got a lot of leverage. But if you don't use stops, you get wiped out. I mean, I can't tell you the number of stories of people I've spoken to that have just simply, and these are big firms, with other people's money, of course, that just simply got wiped out. But if you use stops, you're in good shape. And clearly, what others are showing us utilizing that Nadex platform, just everybody start with $25,000. I think I can't remember what the exact number is that he's up to right now in 3 trading sessions, but
he's more than a double. I know that.
Yeah. So that's pretty good. So you wanted to take a look at the Qs, I believe. Tell me what you're doing, thinking about doing, how I can help you. What you're looking at.
I picked out the Qs going back to where I thought the pullback was over, counting the cycle days.
Yeah.
And since the Qs did go to a new high, and it looks like they can go to a new high again today. And it's amazing how strong it is with that bad day that Apple had yesterday. And Apple's about 14% of the Qs, I think.
Yes, and no question. So it was a very strong performance out there, as you said. With Apple, and yesterday the swing point that it's dealing with is certainly that August 5th level. It's got 15 million shares. And you can easily make the argument it was pushing up into it yesterday with 26 million shares because it did close higher. It was moving up into it, and so it does have the potential to take out that level. And the Qs here, the market, there's no way that this market is going to move lower decisively until the composite breaks its trend. And it hasn't done that. And as Alex was pointing out a cycle date, typically you'll see markets move in between highs and lows, and it's on average, it's like 22 days. It's between 18 to 22 days. Now, quite frankly, folks, it'll work that way on any time frame chart out there. So if you trade a 30-minute chart, you should be aware of swing point highs and lows, and you should be measuring those. Those cycles to see. There are times when they don't work and they might expand a little bit one way or another. But hey, Alex, I didn't realize we were talking that much. Can you hold on through this segment? We'll go back and take a look at the Qs with you.
Sure.
All righty. We'll be right back, folks. The Dow is up 10 points right now. S&P is up 16 pennies. We'll be right back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is up 13 points. We're on the line with one of our winners, one of our daily winners, Alex Klein. Did I get the last name right?
Very good.
Alex, okay. One of our daily winners. He's a part of the $10,000 virtual trading competition. If you are too, you could put $100 in your pocket, courtesy of TFNN. And maybe it was Alex that was just simply your motivation and incentive to do it. So make sure you place your trade today. All the winners will be announced on Tom O'Brien's show out here at 4 to 6. We're taking a look at the Qs. And, Alex, I'm a real big believer in reading the message of the markets by utilizing Japanese candlestick patterns out here, and the in areas of resistance. When they fold, when they don't work, they become areas of support out here. And in the case of the Qs, you have this nice little evening star formation. It's a 3-candle pattern out there, named after one of the great generals, Oda Nobunaga, in Japan out here. And that high of 77.08 was a resistance level. It was tested. It was tested back here on August the 13th. It was tested again on August the 14th. It was tested with this little doji candle on August the 26th. Whenever you test an area of support or resistance with more than 3 sessions out there, that becomes pretty strong support or resistance. In this case, it was resistance. Even had a little shooting star candle that was on September the 5th out there, and one more test just to make sure. So I think we've counted 5 or 6 different tests out there on September 6th. And the trading session here on September the 9th, when it moved above it, and it did it with, decent volume, did it with 25 million shares going against 27 million shares, so that's not too bad. That says that becomes now support. So until you see it close back below 77.08, I'm in your camp in that it wants to run higher. Now, we could use a couple of different tools to try to project where price would go. One could say that it's just simply been in a sideways box consolidation range since July 11th. So for nearly 2 months out there, that's a pretty decent consolidation, and you can just measure the top and the bottom. And that would say here that the Q's price projection, because when we break a consolidation area, the move should be equal to or greater than that, and that would take you to about $80, $79.91. Looks like the number. There's several A to B equals CD patterns. There's the 1-to-1 that had already completed, and now the 1-to-1.272 level is where it should go to next. That says 79.41, so there's another reason to get you up into that $80 level, and it looks to me like that's where the Qs want to run to. We got to always be careful though, because when the market gets into an overbought condition, that's when you start to see one of either two things take place: either a pullback and a retracement, or a move sideways. Clearly, what we want to see is the move sideways, and that's what was taking place back here on August the 5th as it made its high, because it really was not much of a retracement at all, and it just moved sideways. So I'm in your camp. It's got some energy, and Apple yesterday was the opportunity to go ahead and pull it apart, and it just simply didn't do it. But give me your take on it.
Well, even though you've realized that I'm a long-term investor as opposed to a swing trader,
yes,
that I have the Qs going into the 80s, and you actually said the number 80. In fact,
yes.
I have it going into the mid 80s.
Yes,
and I'm in for much lower levels.
Yeah. Well, it's been a
and if you go historically, before the tech bubble burst, the Qs was it was way higher than these prices. If you go back to 99 and 2000.
Oh, absolutely. Yeah, no question about it. This is actually, I'll just pull up the composite. This is my monthly chart for the composite. And, its next area of resistance really should be where we're at right now, about 3,700 level. It's one of Bud Rolf's primary trading ranges, if you use trading range boundaries out there. And there are also great levels of horizontal support and resistance. Now, we're just early into the month, but that level did act as resistance last month. And if in the month of September there's a close above 3,700, and you mentioned going back into the 2,000 area here, well, the composite is going to get up into the 4,300 area for sure. At some, in our lifetime. I'm knocking on wood here. We should knock on wood at the same time, because we want to be around to see it.
If we live long enough, it'll get back to 5,000.
Yeah, no. So it is strong. Now, what is interesting is you talk about cycles. So when I pull this chart up here, I also show some different cycle patterns here. Now, this is not I don't think it's a 22 bar. Let me see. 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. It's like a 22 to 24 bar cycle, but how about that? And so what I show on my system here, let me see if this one, normally the numbers are printed out on here. I'm always afraid to change this, but let me try go.
By eye, they look pretty even.
Shoot, 23 bar. So I got about a 23 bar. I shouldn't have done that in any event. So it looks like about a 23 bar. There we go. Okay, I'm back to normal. So about a 23 bar cycle, which isn't scheduled to hit until April 30th of 2014. Now that should be either a high or a low swing point, and going back into the time frame of 2000, there's only one time when it didn't hit right on the number, and that was back here in July of 2008. Otherwise, it marked, that 23-bar cycle actually marked either a swing point high or a swing point low. And at this stage, it looks like it's going to try to make a swing point high out there. That takes us to April of 2014. So that's my longer, since you're a longer term trader, and because you like that cycle management, as do I. Taking a look at 18 to 22 bars in this case here, the composite on the monthly chart really just confirms what it is that we're both looking at.
Not to disagree with Tom, but I still think we're in a bull market, and the bull market is going to go well into 2014.
Yeah.
So.
Well, remember, it's always different time frames that each of us that we're trading on or that we're talking about, and sometimes that is confusing to the listeners out there because and even I fall prey to that. Sometimes I don't make myself clear enough, because I'm starting out the day taking a look at 30-minute charts or what have you. It's why at the top of my newsletter I give the long term, the intermediate term, and the short term. What do I want to say? Market position. And, since I started my newsletter, the long term has been bullish. Hasn't switched yet once to bearish. Intermediate time frame, and that's been the last couple of years. Intermediate time frame, I don't recall if we may have switched that to bearish once or so in the past couple of years out there, but so it always depends on the time frames that each of us are talking about when we're here at at TFNN. And sometimes we don't, because there's so many different moving parts. Sometimes we don't just make that clear out there. But then that's why I'll often ask a caller when they call in. What's a time frame horizon? That's how you and I started the conversation. What's the time frame horizon that you're looking at? Because it's very important to understand that.
And I have also found in this bull market, starting from the bottom in March of 2009,
yeah,
that after the pullbacks, the rallies seem to be stronger. That each rally seems to be a better rally than the one before it.
It all really depends on how you measure strength. What's the tool that you would use to measure strength?
The number of days it takes to move up. The number of points it moves up. It always seems to, after there's been a pause to refresh, whatever the term you want to use, that it seems to come back stronger and goes up more points in less time than it did in the previous rally.
Yeah,
and
okay,
so that's the definition of a bull market.
Yeah. So that's one definition: higher highs, lower lows. I mean, all kinds of different definitions, and so that's why I mentioned during yesterday's show that there are a number of different indicators that one can use to be able to identify what I consider to be the four elements of any market. And those four elements, we take a look at. So I utilize the relative strength index. To me, that's one of my favorite tools to identify momentum. And so it's understanding velocity of a market. You're talking about, in my opinion, a second area which is called, I call it verticality, or really energy. And so you're using your own tool here by measuring the energy by counting the bars on the way up versus on the way down and price move. And so, because when I take a look at those different, and that's only two of the areas, and I take a look at all the different indicators that are out there. If you want to measure momentum or velocity, people can use the Williams percentage R, or you can use the Williams accumulation distribution, or you can use the stochastics, like Basil uses stochastics, or you can use relative strength like I do. And in the case of trying to measure that verticality, that energy, you can use a system like yours. You can use the Fisher transformation indicator, I think it's Donchian channels out there. I mean, there are the GAN, swing bands. There are so many different tools. MACD is another way to measure that energy, or the power law vector indicator, which I really like, what David White put together to really understand energy between legs. And then you got volume. You've got supply and demand, and then volatility, the liquidity. And with regard to time frames, if we do take a look at a way to measure liquidity in the marketplace, certainly the VIX index, in my opinion, is a great way to do that. And this morning, it's at 1374. It got below the 50-day moving average, exponential moving average, and Alex, in my books and my study of just using that simple tool, the 50-day exponential moving average with the VIX, when price is below that 50-day, market's going to do only two things. Either of them really work for me if I'm long, and that's either go up or move sideways. So,
I agree.
Anyways, So anyway, so that's a great tool, and thanks for sharing that with our listeners. But most importantly, thanks for supporting TFNN. Thanks for signing up for the 10,000 virtual trading competition. And, it'd be interesting to go back and take a look at whoever wins, or the top 10 folks out there, and just take a look at their trades, their thinking, their patterns out here, maybe try to pull that apart. And I think more folks will actually utilize, if you're interested in trading currency. I think trading currency is one of the, for folks that are concerned about the market, depending on the time frame that they want to trade, currency is a great product to be able to trade out there, and the patterns that show up are so nice with regard to Fibonacci, retracement and expansion, and Gartley buys and sells. So, in any event, thanks so much for supporting TFNN, Alex.
Steve, I like listening to you, and have a great time down there in Florida.
Will do. Thanks so much for calling.
Okay, bye.
All righty. So we go back to the market. We're talking about, I was talking about credit card companies and where I think Apple ought to head with the technology. Somebody's going to do it, and the opportunity that they have, I just think, is just simply, it's incredible. I will spend some time, it may not be till over weekend time, which could easily be a Saturday, as college football is on. Love to, if there's a day of the week where I like to be on a couch during football season, it is Saturday when the college games are on. So I'll do some fundamental analysis and take a look at, see what kind of business opportunity is really out there. But MasterCard is on the upside here this morning. Here's a stock that, each of us should have gotten into. Take a look at this thing. This has been a rocket ship. Now, it's had its pullbacks for sure, but the IPO date right around $40 and change, and right now this thing is at $670.21. It's up over its most recent swing point high, which was on August the 6th. And there was 819,000 shares, and yesterday it got above that level with 753. So slightly lighter volume, but not like substantially lighter volume. Today it's already done 350,000 shares, and we've been trading for an hour and 15 minutes. So it's got some energy inside of it as well. If we just take a look at possible expansions here with inside MasterCard, you can see it's hit the 1.272 level, which is 671.50. So far, intra-session high, 671.37 out there. If it takes that area out, next level up is 689.97 in the marketplace, and that is on MasterCard, the leader in the clubhouse. We were taking a look, I think what I haven't done here for you during this show is take a look at gold and silver, because that's really the biggest movers out here, so I should do that for you. Right now, gold is up $33 and change, and it looks like gold, let me try to find that. Everything's on this tab right here. I believe it was right around the $1,300 level that we believe that gold will get down to, 1306. So at 1306, so right now gold has stopped its descent, and it really is a combination of three Fibonacci numbers that have stopped it in the area where it's trading at 1332 right now. And one was a 1.272 expansion of a set of swing points. That was the swing point low from August 22nd to the high of August 28th out there. It was also a 0.618 retracement from August the 7th, that low to the high that was put in, and a 0.382 retracement off of the June 28th area. So what we have to, I can say this much, if it stops right here today, closes right around this level, and then comes back and closes above 1366.20, that'll be your next buy, but not until then. However, we might see a move lower, which looks like it would be more likely. I'd love to see gold stop here, then maybe over the course of the next day or two, get down around that 1306 level, because I don't like to see it coming down with a nice big wide-ranging bar like this. The reward to risk on the trade just makes it a little bit more difficult. 877-927-6648. Be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind. Absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Still a really flat session out here today. Dow's up 9, S&P is up 8 pennies. The composite is up $6. So we're going to go take a look at the currencies out here. We're going to take a look at the euro, Japanese yen. I've got the 30-minute chart up on my screen here. So, you know, if I were trading in the TFNN $10,000 virtual trading competition, and, you know, our leader in the clubhouse, he was trading currencies or primarily trading currency. I don't know if those are his only trades out there, but in the interview that he did with Tom yesterday evening, he was talking about the currency pairs out here. In the euro, Japanese yen, which is a great currency pair for identifying the direction of the markets, right now what it has formed here was a 3-drive to a bottom pattern. Again, it's a 30-minute chart that we're looking at, and it's done it here. It's done it as it is in the, or near to, the oversold territory. And it has formed what looks like a little hammer candle right here at 10:30. So what it's also done, in addition to a 3-drive, what you really like to see is a 3-drive to a bottom pattern, which is what I'm calling this here. You like to see it stop at or near a 0.618 retracement level. That would be the 131.88 level. You can see it got down to 131.71, so that's close enough for me. And that's coming off of the last swing point low at 4:30 a.m. on September the 9th, all the way up to the swing point high that was put in place at 9:30 in the evening on September the 10th. Also, if we take a look at the other swing point out here, swing point low, before we saw the change in trend inside the Euro-Japanese yen, that occurred at 10 in the morning at a price level of 129.89, all the way up to the high that was put in again on September the 10th out at 9:30 in the evening. And you can see it's just slightly below that 0.382 level. Remember, we're not using these as exacts, even though many times these numbers will be hit to the exact T out there. In this case here, you're looking for really the range. So we're inside the range here with a 3 drive to a bottom pattern, and we also are seeing higher lows inside the relative strength indicator and lower lows in price. That is what is referred to, folks, as divergence out there. Now, what would be the real key in order to, I would certainly be trading differently in a contest versus with my money out here, because with my money I want confirmation. And confirmation would be, in my opinion, would be a close higher than 132.07 during the next 30-minute session, which is in 4 minutes. And I can't tell you whether that's going to happen or not. Right now it's trading at 132.00. But in a competition or what have you, this would be a nice little trade out here to take, and that is on the Euro-Japanese yen. Now, what's important about that is with regard to our market, because if this is a 3 drive to bottom pattern that fails, we ought to not then see the Euro-Japanese yen begin to move up, and that will create the energy inside our markets for our markets to continue their drift higher. And their drift higher, as we take a look at it, if we go back and we take a look at the S&P 500, it came in to the point that's up above the 0.618 level. It wants to get to the 0.786. That's not that much higher. 1692 is its number. If it can get above 1692, it'll go tag the August 2nd swing point, the low at least, which is 1700. And that's what I believe we will see take place over the course of the next day or so. That's on the S&P 500. If I do take a look at the index futures here real quickly and go back and take a look at the Dow itself, I want to see if it's back in. So the Dow itself on the futures contract, it tagged with a wide-ranging bar yesterday, the bottom of that descending price channel that it had broken through. And if price gets inside there, and it only needs probably about another 10, 15, 20 bucks or so in order to do that, it will have said that the breakout was a false breakout. Folks, stay tuned. Basil Chapman is up next, and we got Larry Pesavento, Daryl Martin, David White, Andy Hecht, and the Tom O'Brien Show. We got them all for you. Thanks so much for joining me. I look forward to seeing you in the morning. Take care, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.